lot of this buoyancy that we're seeing in the market today is actually courtesy a note that was released by Credit Suisse earlier this morning. So they say that the impact of the growth slowdown will actually only be limited. There are minor disruptions that are expected in the high-frequency indicators. So Latha Venkatesh has more on this. Latha, you've dissected this note through and through. What are they basing their conviction on?
Actually, it's a left-handed comment, left-handed positive comment coming from Credit Suisse. One of the things they're saying is, about 14 trillion rupees of old 1,500 have to come back. As of now, in the first 3 weeks, 8.5 trillion has come back. So we've got 5 more weeks or 4.5 more weeks. It looks like, even more than 10 trillion, 12 trillion will easily come back. So really, therefore, the disruption because of this huge loss of wealth, that which people were calculating is not there. That, while it is sad that money is getting laundered easily, the point is it's positive for the economy itself. It's not getting seriously disrupted for too long. The second point they point out is with charts and graphs and numbers, they show the daily power demand, no difference from what it was in October, August, September, those months, or even previous Novembers. Rabi sowing, no difference from previous November as of now. And wholesale prices of essential commodities supposedly disrupted by truckers not finding money, no impact at all. If anything, prices are a little lower, which means supplies are abundant. Where will the negative come from? They will come from, one, this continuing policy uncertainty, which they, refer to, policies coming from the government to go after black money. So that fear of that uncertainty could impede some kind of business. It's a good thing that the government is continuing it, but the impact on economic activity will be there. Two, on activities like real estate, which are used to tax evaded cash, that lubrication of the cash will not be available because they have whitened a goodish bit. So there will be some real economic activity slowdown. And then the moral hazard risk, people saying that, well, a cement dealer says, I don't have money, I'm going to renege. He tells the stockist and the stockist tells the retailer. That moral hazard could create pain at the lowest level, as well small enterprises and households which will bear the brunt of this could get impacted. So significant GDP contribution of this lowest rung is not there, but the pain points will remain. Limited impact will be there.